Hey guys, this is Tucker here with Because Bitcoin. You also know me as Hagrid. Today we're going to be diving into the charts and looking through the Bitcoin halving cycles, doing a little analysis, trying to figure out if it's prudent or not to pack our bags for the imminent bull run, or if we should wait a little bit. So let's get into it, guys. I'm very excited to make this video. So like and subscribe if you enjoy the content, and let's get into it. Okay, here we've got the Bitcoin halving cycles marked out. There's a few theories floating around. Our friend of the brand, Ben Cohen, is of the belief that we are having lengthening cycles with diminishing returns. I tend to agree. It's a little fluid. There are many different arguments out there. What I'm trying to do here, and for myself and for everybody at the brand, all our community members, is figure out whether or not we should be loading up now, putting our crypto on a cold storage and a ledger, whatever, throwing it in a safe and forgetting about it, right? If now is the time to do that, which personally, I'm of the opinion that it is not, and I'll explain why. So if we look back through history, we've just got Bitcoin on a log chart, having cycles mapped out. First, I want to measure. We'll take a date range from the halving to the peak. See how long that took. 364 days for the first one. We've got 525 days for the second one. And now this is a little interesting. Whether we call this the peak actually makes a big difference. I'm just going to go off the nominal peak. So as we can see, the 2017 cycle was significantly longer than the 2013 cycle. The 2021 cycle was not very much longer. It was 25 days longer. So pretty insignificant, honestly. These things are important to pay attention to just because, we need to know when to start to scale out of our positions, right? But in terms of loading the bags, throwing them in a cold storage, putting them in a safe, what I want to do is figure out what Bitcoin does in the pre-halving year and whether or not it's time, right? So I'm just going to take pre-halving years right here. We're going to take a little price range, guys. So this is the pre-halving year 2016. This is the halving. This is actually the only year we had a drawdown post-halving, right? Up only. This, we had a little drawdown, so that we'll get into that later. But what did Bitcoin do in this pre-halving year? So this is what's interesting, right? I'll zoom in a little bit. We had a peak to trough 30% correction in the pre-halving year. Okay. This first halving, I'm not sure if it really is as relevant as the others, but we still had the drop, right? We had a 50% drop just before the halving. This 2017 cycle is interesting because we had kind of the echo bubble, right? Which is similar to what we're experiencing right now. Not including COVID, right? COVID excluded. We drew down 53%, right? 53% before the halving, before COVID. You could argue, if you took a bars pattern of this and took COVID out of the equation, that, these peaks would have been shifted to the left a little bit. But regardless, we had a 50% drawdown, not including COVID. So what does that tell me, right? On average, 50%, 30%, 50%. I'm not gonna do the math right here, but I mean, on average, I would say about 42% drawdown in the year before the halving. We haven't seen that, right? 2023 opened right here. We put in basically no price action below the yearly open, right? We've gone up only all year. In fact, Bitcoin's up, 88% this year. So here's what I'm thinking, guys. I'm thinking, well, one more thing to dive into real quick. I'm thinking if we remember that number, that 42% correction number, we're going to figure out when that should happen. Okay. From the halving, we'll do it this way. From the bottom of the correction to the halving was 175 days in 2016. This halving's a little less relevant. I think it was, about 105 days from the bottom of the correction to the halving. Okay, we'll just leave that on there. We're just going to exclude COVID because COVID was a black swan and you can't account for black swans, so we're just going to exclude it. All right. From the bottom of the correction to the halving, 145 days. Okay, so I'm going to throw this out. This one really is just not super relevant. Average here, let's just call it 155 days, something like that, right? So on average, 155 days before the halving, Bitcoin draws down an average of 42%. Okay. Now let's see where we're at currently. 154 days. We're on the weekly, so it won't be exact. 154 days gives us November 6th. Okay. Depending on where we are, which is obviously very important, depending on where we are, I don't want to assume the top's in quite yet, but if we were to assume the top's in, 42% would be about 18K, right? 42% would be 18K. The issue is currently we are 259 days out from the halving, okay? So this sort of correction should not be expected quite yet. Okay, I'm going to put this back 154 days, November 6th. So wherever we are in November, in Q4, this is something that I've been advocating for in our Discord and on YouTube for a while now. We should get some sort of nuke in Q4, pardon my language, but we should get some sort of large correction in Q4 of this year. I'm of the opinion that correction most likely comes from here, right? I'm of the opinion we're getting a 3-drive pattern. Okay. I'm of the opinion that, let's see here, we've gotten 1, 2, and we really haven't gotten the 3rd drive yet, right? We're looking for this. And I've talked with Will's Outlook about this, but the Elliott wave cycle guys, which I am not one of, they do something like this: A, B, C, D, whatever. I'm not exactly sure the numbers and letters, and then this pattern plays, it drains, right? This 3rd drive, though, should take us higher than we are right now, right? A little analysis for you guys. On the weekly, the impulse candle, right here, was not the top. Impulse candle, not the top. Impulse candle. I'm going to assume it's not the top, right? Just based on recent history. Okay. This is what it's kind of done this year, right? This is different than what it's done all year, right? We have the impulse candle, and then we kind of hang out up here, and we kind of slide, and then we get another one. And then we kind of hang out, and we slide, and then we get another one. What are we doing right now, right? We're kind of hanging out, and we're sliding. I do expect another one, and we've talked about this on the show many, many times. Outlook is of the opinion we get all the way to 35K. I tend to agree. I think front running that will be prudent. There's some juicy levels up here. There's a CME gap up here. There's a monthly FVG up here. There's a lot of confluence in this like 34 to 36K region. If I was long on leverage, I would be out at about 33K most likely. I would just cut it, but that's kind of where I'm thinking right now. But at any rate, I do expect this correction, this 42% correction, to begin in Q4 from higher. Okay, now I'm just going to be conservative, and I'm going to say it takes place from $34,000. Okay, 42%. Call it right there. 42% gives us 19K. Okay, that makes perfect sense, right? Because I have also been of the opinion that this wick needs to get taken. this wick is not safe. I don't think these buyers here or these people that are long from here are safe. Okay, that makes perfect sense. So I think if Bitcoin were to do exactly what I wanted it to do, which we all know that it won't, we would get a little correction. We continue our slide and grind down. We pop up to 34K, and then we come back down to 19, 20K, hang out before the halving, and then it's pretty much up only time, right? To pack your bags, I guess the time and the price at which to pack your bags for the bull run, in my opinion, not financial advice, is in Q4 around November at around 19 to 20K, right? This area. For me, if we all believe that Bitcoin's going into the hundreds of thousands of dollars in the next 10 years, right? Buying at 19K or at 30K is not going to make a huge difference in the long run, if we're going to 500,000. But, in the next cycle, we go to 150K, your buy-in is 30% lower. It's going to make a big difference, right? It's going to make a big difference. So that's why I can't trader as an investor get on board with, buying all in Bitcoin, alts, packing the bags up here, right? Because I think we're in a very similar situation to this, okay? I think we're in a very, very similar spot. Not to say that we're going to get this, right? I don't think that's going to happen unless there is a black swan. But I think, this would have just gone like that, right? This whole COVID would have been, taken out of the equation. So that's kind of where I'm at with it. I was doing some analysis on here the other day that I was trying to figure out, every time we have another halving cycle, the time between the halving and when Bitcoin goes on a bull run, aka goes up only, is lengthening. Okay, that's what I was figuring out. Okay, when do we buy? We just somewhat figured out. And then when do we really start going up only? And then also, where's the peak? Okay. So we're just a little bit. So let's zoom in back here. This one, again, this bull run back here is not as relevant, but we're gonna do it just for fun. Okay. So here's the halving, and we're just gonna call this the beginning of up only, right? Pretty much up only. 42 days, right? When did we really start up only? Again, this is the one where we had the correction. Where did we start going up only here? I would argue, let's just call it this candle, right? Let's just call it this one. Pretty much up only. 98 days. 98 days. Okay. 2020. We start going up only. Let's see. You could say here. Okay. This candle right here is, I would argue, was the beginning of up only, right? 147 days. I'm going to bring this down a little bit. There we go. Okay. So what do we notice? 42 days, 98 days, 147 days. It's about doubling every time. Okay. If we take it as doubling rather than just adding the days, 2x, 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 expect, I think I've got some, these I had laid out. There's the price label. Okay. Right. Double, double, double. 147 days to 300 days, right? 300 days after the halving. 300 days. Yeah, okay. There. That's where that line. Let's just make sure. Okay. That's right. So, if we take this as a religious fact, just the truth, right? This is when you would expect up only, which would be Monday, February 10th of 2025, which means all of next year is probably going to be choppy, right? All of next year is most likely going to continue to be choppy. Now, if we want to put that thesis to the side right now, and we just say, okay, we're adding, what's 98 minus 42? We're adding about 40 something days, right? Let's just actually let me just we're at here. What did we add? We added about 56 days here. What is that? 140, 47, and 249. Let's just call it 50. We're adding 50 days each time, right? So we're either 2x or 2x or plus 50 days, okay? Plus 50 days each time. One or the other. I couldn't tell you which, right? There's really no way to determine. So this up only vertical line is based on 2x. Now let's take it as plus 50 days, right? Got to be ready for either scenario. Never know what Bitcoin's going to do. Okay, plus 50 days. So what would that be? 200 days. Let's just call it there. October of 2024. Okay, so based on this, up only either begins in Q4 of 2024 or Q1 of 2025. Okay, that is sort of why we're doing all this, right? Not only because we can calculate that there should be a large correction at the end of this year, but that we have time. Accumulation is not over, okay? We have plenty of time to pack bags. That being said, the ideal time to pack bags should be at the end of this year, right? Going, if January 1st hits and your bags aren't packed, I think you should very much consider doing that, right? Packing the bags for the bull run. Even then, right? Even then, we still had choppy action. Choppy action here. We still had choppy action here. That's not to say that, throughout 2024, you can't continue to pack bags, because up only shouldn't start, at least the earliest, right, until Monday, October 28th, 2024. Now, obviously that number or that date is not going to be exact, but it should be close, right? It should be fairly accurate there. Okay, we're going to say up only 50 days. And we're going only 2x. Okay, just so we can keep it a little bit organized. Okay. So that's all well and good. I'm gonna go ahead and let's just lock all these. Okay, boom, 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 boom. Okay, we're gonna get rid of this stuff now, actually. Okay, now let's talk peak. Let's talk price targets. You have already got it on here. It's because of the analysis we did the other day. I believe it was on stream, but we're gonna do it again. Make sure we got it right, just to get the knowledge out there. So let's see. I like using these more than like pulling fibs from previous bull markets and saying, oh, it went up this much in this year, so it's going to go this, that sort of extrapolation in terms of price appreciation is not as relevant, I don't think, as the time factor, which we just went over, right? I don't think we can just say, oh, it went up 1,000% in 2017, therefore it's going to go up 1,000% off the bottom from 16K equals $1 million, whatever, right? Like, I don't think that's the proper way to extrapolate. But at any rate, right, we are seeing diminishing returns, right? That's what this curve is, right? This is diminishing returns. Okay. Anyway, so we're trying to find the peak. So we're going to look back, and we're going to find the time from halving to the peak. Yes, the halving to the peak. We're not going to do trough to peak quite yet. We can get into that in a little bit, but the halving to the peak. Okay. Halving to the peak, 364 days. Halving to peak. I guess we already did this. 546. Okay. So we're going to throw this one out, right? We're just going to toss it out. About 546 days, right? That's, our other team member, King Wabe, says right at 18 months out of halvings when you want to start selling. I tend to agree based on this, right? So 540, wow. 500, there we go. Okay. It got slightly longer. We're just going to push it out just a little bit. There we go. I'm going to move this back. Yeah, there we go. Okay. Now, right, that should put the peak November in 2025. it should be rapid appreciation, right? This window between the beginning of up only and the peak is pretty quick, right? You know, once we start going up only, we go pretty fast, right? So it should be like that. So, okay, let's figure out real quick. I think we figured out pretty much the thing right now already, which is when to pack bags and just put them away. You know, Q4 this year. That's my estimate. Obviously, I'm just gonna say this real quick. Obviously, you don't want to be all in stables right now or all in. I think that is a bad strategy for this current moment. Okay. But I mean, there's no point in not having exposure right now, right? Again, we are down 85%, or maybe not right now. Actually, what are we down? Like 40%, 50% from the peak. We already drew down 85%. It would be silly not to have exposure to crypto. That being said, now is not the time to go all in. That's kind of where I'm at with it. But let's do this real quick. So we're just extrapolate real quick. This is just a little fun exercise, okay? If we can, let's just continue tapping the lower bound. Okay, we continue tapping the lower bound. I'm just going to draw this out as if it continues rounding out like that. 250K, right? I think is a pretty reasonable target, actually. Actually, the interview we did with Leah Halpern was 250 for 2025, and at the time I was like, okay, right, okay, sure, but this actually lines up pretty well with analysis. So, props to her for calling that out. But yeah, I mean, I'm thinking 250K by Q4 2025. I know you can, the audience can sit on to 250K by Q4 in 2 years, and we're sitting at 30K right now. Why wouldn't I just buy? Right? Why would I not just buy? You're looking at almost a 10x, right? In 2 years. Why wouldn't I just buy it at 30K? Well, while 250 over 30 is, what is that? 8.3x. What is 250 over 20? 12.5x. That's a big difference, right? Like, even if we get to those levels, that's a big difference. That's multiples different, right? So I would much rather have a 12.5x than an 8.3x. That being said, the difference in multiples on Ethereum and altcoins is going numbers. In terms of buying right here, buying much lower is going to be significantly more. I'm just going to throw one more chart on real quick. Let's go to Ben's. Let's do the rainbow. Oh, that's not, that's not right. Honestly, he might be refitting it right now, but I am obviously doing something wrong. So we're not going to do the rainbow. But guys, anyways. Yeah, basically that's kind of my prediction for the path of Bitcoin. Obviously, a broader global macro recession could throw this off a bit. I would love and I hope that this recession that everyone's been forecasting for the last 2 years at this point can come and go before Q4 of next year. That would be my hope for Bitcoin, right? If we can do something like this, we kind of bleed, and then we go to 34K, and then we come to 19K, and then we kind of get into, I hope this is kind of the recession area, right? Like, and then we can kind of do this, and then it's peak time. Oh, shoot. That's not good. It's not accurate. This is what we're going to do, guys. This is what we would do according to Tucker. Let's bleed a little. Let's pop to 34K. Let's bleed to 19. Let's kind of go up until the halving. Wait, hang on. Where's up only? There it is. And we kind of do something like this. And then that's what it is right there. If we can have this recession in this area, right? Anytime between now and Q4 of next year, that's going to help Bitcoin out a lot, because if we get into this area, if we get into late 2024 and we're just starting to hit a recession and liquidity is contracting, money supply is contracting and the Fed is forced to cut because there's some liquidity event and blah, 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 then that is going to significantly, in my opinion, reduce the magnitude of returns we see on Bitcoin. Or at the very least, we're going to have to do something like that, right? We're going to have to extend out the peak of the cycle. We're going to have to do this and maybe recession. Oh, no. And then we kind of, something like that, guys. But at any rate, the time to pack bags is not at this current moment. I know that was a lot of analysis, somewhat jumbled thoughts, but I just wanted to get this out here and let you guys know that I think we're coming back to 20K, but I think we do get to 35 first, and I think the time to pack the bags is the end of this year. So, yeah, that's basically it for me. If you guys like the content, feel free to subscribe, hit that like button. We do have a Discord. You talk about all this stuff in our Discord all the time. It's a premium Discord. I know it's a bear market, and paid Discords are really not the hot thing right now because everybody's like, oh, I don't, why would I pay for a Discord? It's a bear market. Who cares? Our Discord has been absolutely printing money recently. I'm just going to say it. Objectively, I'm just going to say it. It's a fact. But just going to throw that out there for you guys. But yeah, that's it for me. I hope you guys enjoy the content. And I'll be back probably with another video sometime next week. So, great to make the video, and I will see you guys later.